everyone. Welcome to the Trading Market Technicals morning call video for Thursday, January 23rd. A little bit of a mixed bag yesterday. Dow Jones down 41, mostly due to IBM. They reported earnings. They were down about $6. NASDAQ up 17, S&P up $1, Russell up 5, and the grind continues. Market has really done nothing pretty much from the start of the beginning of the year other than a couple of down days and one big up day. I think, and I've mentioned before, that the market continues to build energy. Now, the path of least resistance is up, as we all know, because the trend is up. But don't let that fool you at the moment. We could literally just break down at any given moment. And that's why I'm not looking to pick a top. I'm looking for quality trades, quality setups, and I'm looking for where money is flowing. I'm looking for the money. I'm looking to see where are the big whales putting their money to work. Because right now, it is a stock picker's market, no question about it. And if you can start dialing down to these different sectors via ETFs, you look at an ETF, if you look like it's starting to break out or break down, you dial into them and look for the best top 10 holdings, and you take a look in the best setup. And that's what I look to do during the trading day. Now, me personally, not looking to hold anything at the moment, unless you're doing an option strategy, doing spreads and verticals. You could do something like that. But I think the market needs to really either break out of this range, whether it be up or down, and then we can start looking for setups in that direction of that trend, at least a short-term trend. I think the markets are topping, but topping, as you know, is a process, and I'm not looking to pick a top. All right, we look for probability, highest probability on your side to make money. Now, interesting developments last night. China came out with their flash HSBC manufacturing PMI, and it has unexpectedly dropped below 50, which is a contractionary number. Now, that's the lowest forecast since, I would say in the last few quarters. So that's a big surprise. But China is a manipulator of their economic numbers, so that's not a surprise to me that it has now gone below 50, its PMI. So what has that done? Well, that's put pressure on the E-mini S&P overnight session. We're down about 6 at one point. Now we're down only 4, right? But what has that done now? Putting on the risk trade, the safety trade in gold and silver. Gold is up 6.5, where silver's up 25 cents. All right, so that's why I say I think the gold and silver are coming into seasonal strength. Again, between now and February, I think both of them are in downtrends, but you can get some great retracement rallies that you can play if you're nimble enough. Okay, remember, and that's the key, being nimble. But anyway, I do like the gold and silver trade. We're going to go over that in a moment as well. So keep that in mind. I think China is going to be the canary in the coal mine. I've said it in 2013. But if they start to really slow down and hold in the range, they're a big buyer of our goods. So if that's the case in our commodities, if that's the case, then I would look for some further weakness and some strength in the dollar. So we'll just see. Let's take it one step at a time. Let's run through these indicators. What you see in front of you is the new 52-week lows. And as you can see here, we continue to hold above this area. I'm still watching to see if we start breaking down. Now, what am I looking at the indicators? I'm just looking for clues that we are topping in the process. Now, there's some levels that I'm looking at in the ES, which I'll show you. I've mentioned before, but we need to break some key pivotal support areas, hold, and separate from them before we look to start selling rallies. Okay. In the meantime, what we do is we're looking for good pullbacks, some good quality stocks, in some good pullbacks, support, Fibonacci clusters, and then look to buy in order for us to continue with this trend. Now, I think the markets are absolutely overbought and tired. You can see it in the price action during the day, and that's what's kind of holding me back a little bit, because we need to break out of this range. We need to get out of this range. Remember, energy is building, no question about it. Okay, so now let's take a look at that. Let's take a look at the other. I just want to show you a couple of things here. The McClellan oscillator really hasn't done much here. We are ticking up a little bit, but again, you can see the Bollinger Bands energy is building in the indicator as well. The path of least resistance is higher, but remember, we could go either way and have plenty of room on both sides before we become overbought and or oversold. So that's a good thing. Take a look at the VIX. Now, as the market is just grinding along here, doing not much of anything, the VIX is holding below this long-term trend line from 2013. Okay, so if we break above the 20, we do have a little bit of resistance at the 50, but look at what's happening at the Bollinger Bands here. Energy is building. So to me, I think there's going to be an explosive move in the coming sessions, and that's something that I'm waiting for, to be nimble, have cash on hand, and then react to what the trend's going to be. Okay, and that's what you want to do. You want to be overly long or overly short, and then you're like a deer in the headlights. So you can't focus because now everything's going against you. That's not what you want. Take a look at the bullish percent, and I've been showing this every day, and I know it's boring, but we continue to separate away from the moving average here, and it's the bullish percent, which takes a point and figure view. I think that this is a very reliable indicator, and I think that this is telling us that we probably will see some downside weakness. Okay, so just keep an eye on that. I like to look at that. Stocks above the 50-day moving average really doing not much of anything, but we are in this apex of symmetrical triangle, which I think if we do hold here, I think we actually will break lower. This is a good spot, 75, 80, 90% in this area where logical pullbacks are to happen, as you can see here. Okay, so let's keep an eye on that. Now, I just want to run into the precious metal trade. Get a couple of emails all the time. Well, you still like gold, you still like gold. It's not what I like, it's what you like. It's what you want to see in the charts and what's telling you. Me personally, I still like the gold and silver trade, at least up until next month, sometime in February. I'm just looking for a big move up, and then I'm looking to quickly get out, and then we look to reevaluate, because gold is in a downtrend, right? It's still in a downtrend, but in the short term, we have alleviated this downside pressure, this bearish symmetry, and now we're bull flagging on the way up. And gold pulled back a little bit yesterday, but still holding some key areas of support, which I like. No worries to me. We're above the 20. Yes, we just broke below the 50, but this is a normal for gold's price action. And as you can see, and let me just grab a quick little chart here. And as you can see, this is small, but if you could see here, gold's up $6, and we broke back above main pivot for the day, the GC contract, okay, the continuous contract. So I like gold here on that, on a break higher. And really, the reason why, we go to the silent leader again, is palladium, right? Palladium hasn't told me anything to get out of the gold trade. If we were accumulating gold, we want to be looking to buy gold on weakness. So to me, weakness is a welcoming factor here, and gold and palladium is holding above its 20 and consolidating here, looking to me for more of a breakout. So watch palladium. What palladium does is what you take your cue off of gold. Now silver, same thing. Silver, yes, broke down a little bit. We tried to break out, it failed, and now we broke down a little bit. But to me, this is just basing nicely here. No problem at all. If it breaks 1950 and we take out this $19, then I would be a little concerned that maybe that silver trade is not going to work out. But until then, listen to what the charts tell you. Look at the charts and stick behind your trading plan. What's going to fit for your trading account. Okay. Let's take a look at one more. All right. Actually, let's go right into. That's pretty much it. Let's go right into the E-mini S&P. Here, I opened the chart up to show you. Here's the 1838, 1820. This is what I'm really looking for. A break and close above 1820. And I'm not saying for a day. I mean, a couple of days below 1820, and then really start to separate is where I'm going to start looking to start selling rallies in the market. Okay, right now that's not the case, but look at what's happened. This is the January, the break of the new year. We actually closed at all-time highs, December 31st. The next day lower, and we have gone absolutely nowhere other than this day here. There's 2 days we've gone nowhere. Stocks haven't really been doing much. They haven't been performing well. Now, again, if you're trading the higher beta names, you're going to find some movement if that's your style. But if you're looking for, stocks that are generally behave better than the high beta names, really haven't done any much. If they opened up, they gap up, and they kind of go sideways. So you as a trader have to find opportunity. Now, sometimes there isn't any opportunity. As you can see here, we've gone nowhere. So this is the areas I'm still looking for. 1838, 1840-ish, 1820, a break below and close. And that's going to give us a little bit more of clues that what are we doing if we're looking to head back lower, back into this 1800. Now remember, the 1272 extension here is 1857. So we break to the upside. This is going to be my short-term target, taking out that highs of 1846, and that's going to be the target I'm looking for. Now, obviously, the longer-term picture, the bigger target on the 1618 comes in at 1870. Okay, if that were to happen. Okay, and remember, at this crazy market, anything could happen. All right, so let's go into the charts. As you can see here, again, pretty much of nothing. Look at what's happening. We've literally just been sideways all of January, other than a couple of two blips down and up. So holding to the upside. Again, doing nothing wrong, right? And we're unwinding this bearish readings on our momentum indicators here, and volume is kind of light on any type of pullback. So really doing nothing here, all right? But the market is very sluggish. If you're looking at price action during the day, you could see it. All right, here's the diamonds. Diamonds here doing pretty much nothing, other than, of course, the IBM, and that also took it on the chin a couple of days. But look what's happening in Bollinger Bands. Energy's building again. So I'm really anticipating some sort of big movement in the coming days. And transports here. Now, if you're going to take cues from anything, here's our leader, the IYT. This now broke back above the 2012 lows, all right, and now this uptrend here. So to me, if the transports continue to hold at the upper end of this range, now remember, one day doesn't make a trend, but if it can take out yesterday's high and to really start to chug along here, as a leader, it will pull everything else up. Now, speaking of that, we want to see what the Russell does, right? That's our secondary leader, is our Russell. Now, for me, I like watching the transports and then the Russell start take off, and this is following suit. Okay, so if this continues to move high with the transports, it's going to bring every other indice up, along with the Qs, S&P, and the Dow. All right, but here, as you can see, of course, we're overbought. Again, not a sell signal, but we're bought back above this 2012 low of this trend line. So to me, the path of least resistance, it continues to be up. Now, remember, anything could happen. News trumps the charts. Let's see if this PMI, China PMI, has a little bit of legs here to the downside. We shall see. Okay, we got the GLD. All right, here's the XLE. Now, energy stocks are actually fare well until May, and it's doing pretty well. As you can see, the XLE, we have a big bearish rising wedge, but hasn't broken the low of this trend line. And we had some good reports coming out of Schlumberger, SLB, Baker Hughes, BHI, and of course Halliburton. So I think we're gonna look to buy pullbacks in this sector as well. And crude oil kind of stabilized, so it's not as bad as well. Here's the USO, as you can see, popped up again. And remember, guys, you can buy this if you want, if you're nimble enough. Me personally, I prefer a basing pattern and a break out of that base. And that, to me, is easy to manage. You're below that base here. Now, we have another low here that we can trade off of on the next pullback. So what you want to do is look for the next pullback, determine where the next pullback is, and you can manage that by putting your stops just below this low. Okay. Right now, for me, I have no trade in USO. I need to see a better base building than just look to buy, because USO is starting to run up a little bit. Now, before we get into the other sectors, I want to show you First Solar. And I mentioned solars in the beginning of the year. Solars, banks, financials, and of course home builders are one of my three favorites. And reason why is First Solar looking fantastic. Now, yes, it has pulled back. It's back to the 61.8% retracement, holding a 50. Can it go lower? Is it in making lower lows line? Absolutely, no question about it. And I do believe that, of course, it's in the downtrend channel here, right? But what I look for is some weakness and a turnaround. I think the solars are going to be hot this year. So I'm looking for a break back above 54.25, 54.30, and then a test of the highs and actually break higher. Now, we don't want to be looking to pick a bottom, so we want to just kind of watch this and stalk this sector. First Solar, YGE is another great stock to be looking at. There's a lot of them, JSOLA, JSO. There's tons of stocks out there that really hold well, and I do like the solar. This is one of my favorites here. Now, coming a pullback here, low volume. Look at the momentum indicators are lower, and just starting to creep back up again. MACD and stochastic. So First Solar is one of my picks that I do like, and I'm watching that as well. Okay, now, as we all know, the home builders, love the home builders. And I showed you that we had downtrend channel, as you can see here, pulled back nice, a little bit too big for a bull flag, but held the 50, held this area here, right? We have this uptrend channel from a symmetrical triangle breakout, doing quite well. Now we look to break back above it, And I think the home builders are going to be on its way. And also the reason why, as I mentioned about the Volcker rule, they implemented that, and I think the banks and financials have to do some heavy, heavy lending. And I mean by that being aggressive lending money out, because they can't be trading deposit money now, and they need to make up that income. And I think that's going to be a great spot for it. Now, obviously, we have markets uncertain right now, so that's why you have this pullback, people getting out of certain sectors. But watch this sector. I think it's going to be hot. Okay, Lennar, I like Lennar here. But my other two favorites is Pulte, PHM, as you know, and then, of course, KBH. And KBH woke up yesterday, as you can see. Pulled back, didn't do much of anything, but KBH, if you're looking for a real nice entry, wait for this take out of this little consolidation area. Take out here, let it hold for a day or two. It's easy to manage below the 50-day moving average, but I do like KBH here. And XLF, the financials, another good one, holding above its 20-day moving average, so doing quite well. And then, of course, Citibank held above its 50 again, pulled back a little bit. It had its earnings gap lower, sold off for a couple of days, 3 days. But again, I think this creates a buying opportunity here. But we don't want to look to pick bottoms, right? Let's build a base here for a few days, and let's get the trend to revert back up to the upside. And then you want to be buying on its way up and adding on any pullbacks as it's moving higher. Okay, we don't want to be looking to pick bottoms here. And of course, JP Morgan pull back again a little bit. I'd like to see a little deeper. I would love to see. I'm waiting for JP Morgan to come back in. And if we can get some market weakness, of course, banks and financials will follow. And that'll be welcome. That'll be a welcoming thing for me, so as we can start building some positions in some of these longer-term stocks. Of course, Goldman Sachs, again, I think Goldman needs to pull back a little bit more, so no trade in Goldman. But I always like to watch what Goldman does. And then, of course, we don't have a chart in Apple. Okay. Well, Apple actually did quite well. Icon said that it has invested $500 million addition to what he has in Apple, and he thinks it's the big sweet spot. So Carl Icahn tweeting out what he's doing, and, of course, brought Apple higher. Okay, guys, that's really about it. Let's see what happens today. We're down 4.5 in the E-mini S&P in the pre-market session. Gold and silver are up. Let's see if we do get some follow-through weakness here. Okay, be careful. Use your stops. But we also have initial jobless claims coming out this morning at 8:30. So I do think that we're going to see the market starting to break out or break down between this consolidation here at any given moment. So use caution and be nimble. Have a great day. We'll speak to you tomorrow. Take care.